Good evening, traders and investors. It's Wednesday, about 5 p.m. almost. Let's do a quick market recap. Not a whole lot has changed. Let's just look at the short-term analysis. We had some FOMO on the markets on our 30-minute chart yesterday. Talked about how we could see the markets pull back from there. We have seen a pretty big pullback. When we have broad market levels, extreme levels, which is FOMO or panic selling, it bleeds over generally into pretty much everything else. So for example, yes, the stock market sold off, but if you take a look at the other asset classes here, gold sold off. We saw gold miners, silver miners sold off. Pretty much everything kind of sells off when there's a broad market turning point, when there's a short-term kind of extreme level hit. So that's kind of important to understand that we're just in this market having a bit of a pullback. If we look at the daily chart, this little indicator, on the 30-minute chart here, this little spike was a tipping point yesterday to trigger some selling, and it got a lot of people's emotional. The last couple of days, people have had a lot of FOMO. And now people are feeling, okay, a little bit better, maybe, because price is pulling back, and it gives them potentially an opportunity to get in. If we look at the 2-day pullback here, nothing significant at this point. I do feel like we might get a bit deeper of a correction, but in the grand scheme of things, the price is just bouncing up the 20-day moving average. And after a nice run, a multi-week run like it just had, a pullback is perfectly normal. And typically pullbacks start because of a short-term tipping point, an extreme of optimism or FOMO. People finally pile in, and then of course the market pulls back a bit. And this is why people always say, I buy it and then it pulls back right after I buy it, or I get in and then it drops even further. And that's simply because they're running on pure emotions, and they're chasing pricing, and they are the indicator. And if you happen to do this, then obviously this is a good channel for you to watch, simply because that's what I cover. I let us not get caught up in these moves. And it's important to know when the market is, we have these extreme overbought territories, we have these extreme oversold territories, and panic usually that spark these big moves to the upside. But anyway, a few things I want to touch on real quick. We've had a couple people with different comments and share some charts. So let's just take the members area really quick. Let's take a look at this person's here is talking about the DXY, the dollar index, and he's drawn on this chart saying it looks like there is a inverse head and shoulders, and it's pointing to higher pricing. Now, I'm going to show you, I think this is zoomed in a little bit too much. So let's step back. I think you might want it to go higher, and that's why you're creating this, you're coming up with this strategy here, or you're finding this trade. You want it to go up. I think you're digging a little deep for that. And so let's just dive into that really quickly here. Let's go to the US dollar. And if we just zoom out, you can see the big picture here. We had the big move, pause, a big move down. It's trying to carve out a bottom. Now let's zoom into the short-term chart where this person has got that. How do we get that inverse head and shoulders here? Well, if we remove the price, and then we remove all these moving averages, we don't need these longer ones, but then we change this moving average to 1, this thin one. This is the inverse head and shoulders that he's seeing right here. He or she, I'm not sure, I have to look. But here's the inverse head and shoulder. But in the grand scheme of things, I mean, that is, yes, this is a little tiny bull flag, and it's pushing up. It is pushing into resistance, into this price action. So it could totally play out. But keep in mind, when you zoom out on the chart, it really is just, still in a downtrend. It's still struggling. I wouldn't get too excited just yet. With that being said, it does have a little bit of strength. When you do look at the daily chart and we pull it up, it's had a nice bounce. It's had a bit of a pullback, and it's having a nice bounce back to the upside. So we'll have to see if this has follow through and starts to break out. The way I like to look at trend reversals, more so than an inverse head and shoulders pattern here for this particular scenario, is an impulse move. We want to see a trend move up. It has to break 2 previous standout highs. So this is obviously a fairly clear high level on the chart. The market kind of rallied up and hit this level a couple times. So that's one level. For an impulse move to happen, we need to see a rally break through 2 significant levels. So this is one resistance area. This is obviously clearly another one. So if we get an impulse move and this shoots up, it busts through this resistance level, busts through this one, then the first pause and pullback should be seen as an opportunity. And if you notice, once you start to get the break of two previous highs, the overall bias here goes from down to now kind of sideways to more so it will be starting to head up, right? This could pull back, find support, and then rally and move to the second half of that move. So it goes from channeling down to more so kind of trading sideways with a double bottom to then suddenly, starting to have a series of higher highs, a series of higher lows, and it could start to move higher. So it is interesting. I do think the dollar is wanting to bounce and rally a bit here, but it's still struggling. There's a lot of these big green bar days that just get sold into the very next day. So I see that point. This move up in the dollar is definitely putting a little bit of a mute on gold. We saw gold down about 0.9% this morning, about 1% this morning. I pull up the gold futures chart. It's pulling back a little bit here and just taking a bit of a breather. The other thing I want to touch on real quick, let's just go to the hot list and let's take a look at a couple of potential discretionary plays, things that actually are looking kind of interesting. Now, the MJ ETF has been beat up big time. We go way back on this chart. It is just a dead cat. Man, this thing just keeps going down. Every time it finds one of these big bounces in these rallies, which, these may not look that big, but they are huge. As each one gets bigger and bigger as we go down, these rallies that happen are fairly substantial, and we see them happen over and over again. We've just had this one here, more so from here to there, 100% move as price goes down, and we keep getting these waves of people moving in. I don't know what it is. It's like a pump and dump type of play where it gets pumped up and massive gains and then just gets sold into like crazy. There's obviously probably something to do with regulations or rules, but anyway, what I find interesting about this play here is a member brought this up the other day. It has a kind of a head and shoulders pattern with like this bear flag, this broken arm kind of limb that I talked about, I think, in our mentoring class. So it's got a shoulder, it's got a head, and then this refuses to bounce because it doesn't have much strength. And technically, this is a neckline across here. If it was to break through here, and especially if it breaks this low as well, and then, of course, it's got a few lows layered in here. As it breaks through these things, each time it's going to create a wave of further selling, and it has potential to unwind very quickly. So if we do have a sell signal in the stock market, there isn't an inverse ETF for this. So this would require somebody to buy to sell it short. But it's interesting. I think there's quite a bit of downside potential for this as it starts to break down to the downside. It would unwind. This is a fast mover. I mean, just as quick as it can go up, it can come back down. So it's kind of an interesting play. The other one that we're to touch on is XLE. Touched on this the other day as well. Potentially, this could become an inverse trade where eventually the market rolls over, and this has a potential for a very big leg to the downside. So we're still watching a few of these discretionary trades. We have to let all this stuff unfold. As much as we see it kind of coming, just like a major market top, you can't take action on it. You have to wait for it to happen, right? That's the hard part for most people. And some of you want to look at URA really quickly. URA, it does have a pretty strong chart pattern, right? If you go look at this big pattern right here, you can see we've hit that 618 level. Typically, if you hit the 618 and it pulls back or chops around, when it starts to run and break out, it should go up and hit that 100% measured move. So there is potential from where it is to run about another 20% potentially to fill that whole move. That would be this rally up, this pullback, and then 618, and then 100%. So it has potential to have still a decent move. Obviously, if the stock market gives us a sell signal, it rolls over, this is going to go down with it. They pretty much all move together. Very rarely will it buck the trend. So at this point, I think the key is here, let it unfold, let it mature, build a bull flag and pull back. When it starts to hook up and starts to rally, you could jump in potentially for that next leg if you're not in it, or at least, get ready to trim profits off if it does get up close to this level where it could run out of steam. Another short-term warning sign are utilities, XLU. Both utilities and consumer staples moved up today. Everything was pretty much down. When you look at the indices, they were down. But money's flowing into utilities. People are nervous. Stocks have sold off for 2 days. Utilities have gone up for 2 days. This is a sign that there is some big money is getting nervous, and they're looking for some big defensive plays, a safer place to put their money because they feel like the stock market might roll over. If we take a look at the chart of bonds real quick, Bonds are kind of flagging sideways here. We'll see if they're going to get traction and turn higher, or if they're going to roll over. In the grand scheme of things, they're still in a downtrend from the long-term standpoint. But when we do look at the near term, this was a pretty good impulse move to the upside. We have seen this move here shoot higher. It broke really these two highs right through here at the same level, and it broke this high over here. So it's had a nice impulse move, really starting to change the trend from series of lower highs and lows to now we kind of have a series of higher highs and higher lows. So the question is this going to pull back with the rest of this bull flag and then eventually work itself higher, or is it going to hook up and start to rally? I think a lot of people are kind of trying to still gauge, is the Fed going to keep cutting rates? And if so, bonds should go up, or is this kind of going to fizzle out a little bit? As you can see, bonds have been very, very choppy, very noisy all over the place. And this is one of the reasons why we don't like to get involved too much when something is in a stage one. If we scroll down, stage one, this is sideways chop. It's shaded orange and red because it's dangerous, it's wasting time, it's risking your money. There isn't clear direction. And that's where the bond market is right now. It's been trading sideways and struggling for quite a while. Anyways, that's it for now. Overall, we'll see how the markets move tomorrow, and we'll go from there. Take care. Bye-bye.